Alrighty. So recently I did a training with my students from my mentorship program, and the training was on the winning mindset of successful options traders. So this was a training on the mindset, right? The trader psychology. And after the training, my students gave me the feedback that it was really, really very helpful for them. And I thought that I wanted to share it with you as well. Now, the full training is over an hour, so that's a little bit too long. So what I did is that I just cut out parts of it, right? Excerpts of it. So I'm just going to give you a short preview of this training, but at the same time, it should be good enough for you to really understand, right, what you should be doing inside your own trading as well, especially when it comes to psychology. All right, so I'm going to play the video now and let's get started. Okay, great. So I'm going to move on to the next segment, which is on the winning mindset of successful option traders. So the most important thing, you guys might be surprised when it comes to trading, is really on the mindset. So this is one thing that you notice for a lot of you guys that just joined. When I go through the call with you guys before you join, I wanted to see your mindset. That is where I show you guys, the string of losses, because it's very important to understand that strategies, no matter how good they are, there will be losses, and I want to see how you deal with that. So when I talk about this winning mindset of successful options traders, it's really learning how to deal with the risk side, with the loss side, right? Because that's the time where a lot of traders panic and they cannot trade objectively. They let their emotions override them. So I'm going to share with you a few traits of successful option traders or traders in general, where I've noticed over the many years that I've done trading, especially also during the time when I was in a prop firm. So not many people know this. Actually, most of you guys should know this because I actually mentioned it in my YouTube videos where I used to be a prop trader. So I kind of understand, what tend to be a good mindset and those, that don't do well in the trading endeavor. So the very first thing is that good traders, or rather those that I think that has a very good chance to succeed in the long term, is the one that really focuses on risk first above all else, really is manage risk first. So he or she understands that losses will come, it's inevitable, and he or she embraces risk rather than avoid it, right? They don't avoid it. And many of them just think that, okay, I'm only going to deal with the risk when it comes, right? So you'll be surprised. I've actually have quite a number of people from the YouTube audience, they will email me, and straight away from the mindset, I can sense that they're only focused on the amount of money they want to make rather than the risk that comes with it. For example, when you put on a trade, a lot of the people new to trading, they will see how much money they want to make. And at the back of mind, they will just say, this is a high probability strategy. I know that most of the time I'll make money. So they just look at how much they want to receive without looking at the risk that they can actually suffer if the market goes against them. And everybody has gone through this, right? Even myself, right? Back in the days when I first started, I put on trade that would risk the whole account just to make a few $100, and my account was like 20, 30,000, just to make a few $100 in a few days, right? Of course, that didn't go well. That's where my whole journey into managing risk comes. So I want to share with you a very quick story back then when I was in the proprietary trading firm, to give you a little bit of an idea of what I mean down here, give you perspective as well. So back then when I was in the prop trading firm, the very first day I came into the prop firm, I was very excited. I remember, but it's also the most shocking day of my life because a senior trader got fired that very same day. Now, this senior trader was a profitable trader. He had been in the firm for, I think, 3 years or so, was making money consistently, right? And he was fired because of one mistake. So inside the prop firm, every trader has a max loss, right? Depending on your own trading size. So when you hit the max loss for the day, it is up to you, your responsibility, to cut all the positions you have and stop trading for the day, right? This is it's a golden rule that you shouldn't break it. So on the very first day I was there, what happened was that during the trading day, all of a sudden, the boss came out of his room, right? He came out of his glass door room, which you can see through, and it was a very big towering guy, and he was just standing there somewhere around here, right? He was standing here, right? So I was sitting here, and it was basically this trader down here. Now, of course, not this guy. This is just a stock photo that I took. But this trader was there, and our boss down here, a very big guy, and he was shouting to this guy over here and asking him, when are you going to exit your positions? This is the question he asked him. So this trader was very engrossed when he was trade. He turned around and told the boss and said, soon, I'm going to get out soon. So the boss just said, okay, you said soon. So the boss went back to the room. So what happened was that this trader was in a underlying where the market went against him tremendously, right? The stock pretty much crashed and he was in a very big loss, but he didn't want to get out of his position, right? So it was an undefined risk style position. So he was losing a lot of money, way past his max loss. And his way of saying he's going to get out is that he's going to queue as an offer, right? So that's a bid and offer. So basically you're queuing as a limit order to try and get out at the price that you want, not what the market is. So he's thinking that he can reduce his loss. So then 5 to 10 minutes later, the boss was so angry again, and he came out of this room and he just told the trader to get out of his seat. So he went over the trader and asked him to get out of his seat, and then he sat in the trader's seat. So you know your life as a trader is over when the boss have to ask you to get up, sit at your seat, and exit your positions for you. So the boss had to sit in his position and exit all his positions for this senior trader that has been there for many years and has been profitable. And then at the end of it, the boss told him to pack up all of his stuff. I mean, of course, heard a number of vulgarities along the way, and then told him to get out of the firm. That day itself was the last day that he was in the trading. So why did he get into this situation? Well, basically, it's the same thing as most people, how they deal, right? We are afraid of taking the big losses when it comes because we are hoping it comes back. That's one thing. So he doesn't have any, the other thing is that he doesn't have any plan in place, right? The time to plan is actually before you get in the trade, to know exactly what you're going to do when you get out, or rather when you're in the position, when to get out. Because if you're going to get in a position and then you're going to sit with a big loss and you have no idea how to get out and your plan is just to wait and see, then that can get into a lot of trouble. That's how accounts have been blown up. So guys, with you, I really don't want this to happen. I've seen this have destroyed many people's accounts, careers. Please don't let it happen to you. Especially, I've already had the training. This should never happen to you guys, okay? So another story I want to share, a very quick one, is about myself. So I had a time in the prop firm where I also had the same thing that happened to me. The market came down very quickly. I was in a huge loss. It was past my max loss for the day. But immediately I remember this guy, right? And at the same time, before that, I have experiences of losses. So I was really very into risk management back then. I had a good mentor as well, right? My mentor, which was my senior, who was sitting next to me, he would emphasize a lot about risk as well. So I had that good training or prep. So the moment this hit me, when I had the loss, straight away, I had to exit it, right? So I didn't exit it immediately, I must admit, because I was hoping the market came back again. But when it further went down, I had a plan was that, okay, if it went down by a few more points, I'm going to exit rather than wait for it. So it did go down a few more points. I exited it. And then straight away, I closed out all my positions. I stood up. I went straight to the boss's office. So the boss was down there and his office is full of screens, right? But his screens is not full of stocks. His screens is full of our positions where he can see who is losing a lot of money, who is making money, right? So he knows very well who is in trouble that day. So I went into the office and I told the boss, I hit my max loss for the day and I closed my positions. Here I am to let you know. So the boss was there and then he said this, I was waiting for you to see, when will you come in? And I'm glad you came in. Then I knew, I was lucky because if I had waited any longer, probably I would be fired that day as well. So he goes on to say, so Davis, tell me one thing. Could you have done better? So this question, when he asked me this, I was like thinking, sounds like a test question. And what he's really trying to ask me is, could I have lost lesser? Could I have exited earlier? Right. So honesty is another thing. You have to be honest with yourself. Right. So I thought about it and I said to him this. I said that I could have gotten out earlier because the market came down and I saw it was a loss. I didn't want it to affect my P&L for the month. Right, because we got paid on a monthly basis. If the P&L, this took down most of my profit, then I'm not going to get paid that much. So I told the boss that, I didn't want to exit that quickly because I want to see if you come back to lose lesser. But then
Later on, it further went down, so I cut my losses. So the answer is yes, I could have cut my loss earlier, but I didn't want to. I apologize. So the boss said, I'm glad you're honest with yourself, right? Because I'm still waiting for a few guys to coach, and he showed me his screen. A lot of people lost money that day. So it made me feel a little bit better. That's one thing. I'm not the only one. So he's waiting for the other guys to come in, but I was the first person to come in. And he said that what you did down here can help you in the long term because you're honest with yourself and you at least cut loss when you should. So then he told me that, hey, there is no need to trade for the rest of the day. Go and watch movies. So that was a very interesting advice. Go and watch movie. We weren't allowed to go home. So one of the screens which we have was to go and watch some show. So he said, Davis, go and watch a show for the rest of the day. And then tomorrow come back, refresh, forget about the day, and then trade again. So a little bit long-winded, guys, but basically the whole idea here, a few things, right? You have to be prepared. Whatever comes, prepare in advance. Number two, be honest with yourself, right? If it's going to be a loss, just take it, right? And make sure that your emotions are in check. Do not let emotions override your ability to make objective decisions. So most of the things that you learn in these programs are all about statistics and being objective. So in no way, shape, or form should our emotions actually come in to affect our trading decisions. Okay? All right, next. The next thing is that he or she also understands that max losses will happen occasionally. So you can see I say max losses, guys. This is something that is inevitable, right? Because probability already depicts that it will happen from time to time, although occasionally, right? So down here is the stats where, I've already shown you guys. This is on a very typical iron condor. So based on 20 delta, as you can see down here, this is a study done by Tasty Trade team over a number of years. And you can see, right, if you manage them at 21 DTE, you do have a pretty decent win rate, around 72%. But what does that mean? It also means there's a 28% chance of a loss. So if at 21 DTE, so this graph down here is at 21 DTE, right? So you need to distinct yourself to understand the two different P&L graph at expiration and at 21 DTE. So at 21 DTE is this blue color curve down here. And then the one which you see in green and red, that's at expiration. So at 21 DTE, you notice that there are different points of losses. The loss can be here, the loss can be here, the loss can even be here, which means to say that if you trade long enough, max losses will come. That is why position sizing is very important. Again, ties back to don't just look at how much you want to make. A lot of people focus on this, and when the losses come, they cannot accept it. And when they cannot accept it, this is where all things get messed up, right? Especially we know the statistic, so we stay objective and we stick with it, right? So understand that max losses will come, will help you trade better. Now, next one. He or she knows that losing streaks will come. Again, probability already depicts it will happen and we expect it to, so we size our trades accordingly. So again, probability table. You guys have already seen this, but not many people actually go in depth to actually take a look to see what it actually means. So for example, iron condor, around 65 to 70%. You can see for the most part, all right, around here, you have 4 losses in a row. That is about a coin flip chance or slightly more. That means along the time when you're trading this, if you trade long enough, 4 losses in a row will happen. So are you going to risk so big that in 4 losses, you're going to wipe yourself out? Absolutely not, right? Because we already know it can come. Now, on the other side, if you take a look at something like 7 losses in a row, we are looking at 6% and 2%. So this is low probability. But does low probability means it will never happen? No, right? Low probability just means that it will rarely happen, but it can happen. So when you get 7 losses in a row, you shouldn't be upset or angry or asking why is this strategy like that. Well, the answer is because it already shows that it's possible. So again, position sizing is very important. So when the losses does come, at least you already prepared beforehand. You know that, hey, it's part of it. I trade objectively. Statistics in the long run is going to work out, right? Because you can see the statistics already say daily P&L. It means profit or loss. So you can see based on their studies they already done, it shows a positive number, which means in the long run, it's going to be profit despite all the losing streaks, despite all the max losses. So this is something that if you truly understand about the strategies, you're able to position size properly, able to trade more objectively, and not let emotions rule you. Okay, so very, very important thing. So by the way, guys, you'll notice that this is a very common theme that I'm talking about, managing your expectations of losses. And I'm going to keep repeating it over again until it really gets ingrained in your mind, because it got ingrained in my mind when I was trading many years ago. And this has been my guiding principle, right, throughout the whole time, that helped me stay out of trouble. Now, next, when setting up a trade, he or she takes all the above into consideration and looks at what is the max risk on the trade first, and asks the question, if the max loss does happen, can I accept it? Now, how many of you actually ask yourself this question? Just throw it up there. Maybe can somebody say yes or no? You do. Good. Very good, Michael. Anybody else? Do you ask yourself this? Do you accept the risk? Yes. All right. That is why you guys are in my group. Fantastic. So all yes. So by the way, Keith asked the question, what is this? Davis, is this the same boss that fired the senior trader? Yes, it's the same boss that fired the senior trader. Okay, so I'm going to move on. Now, next, the answer, if it's yes, you can accept it, then you put on the trade. If the answer is no, then you should keep reducing the max risk until you can accept it. Okay, next, the winning mindset of successful options trader. The next thing is that he plans his or her trades, and very importantly, trades his or her plan.
By the way, if you like this video so far, please subscribe and also click the thumbs up button, and also do get your free copy of the Options Income Blueprint, where I share the top 3 option strategies that help you generate a consistent income each month, trading just 1 to 2 hours a day, right? So if you want to go ahead to get this copy, just head on over to optionswithdavis.com/blueprint. All right, back to the video.
Now, I'm pretty sure you guys may have heard this Mike Tyson quote that everybody has a plan until you get punched in the face, yeah? There's a time where, you cannot think properly and then you get hit. But that's not the case for trading, because you're not literally being punched in the face. You're just affected emotionally. And that's what a trading plan is for. Because when you're emotional, you need to look at something, right, to tell you what to do, right? When you already have the plan to tell you, all right, if it goes down here, you execute it. Okay, so he or she relies on statistics to trade objectively and not based on his or her trading decision based on emotions, right? Of fear and greed, right? These are the two big emotions that you will usually face when you're trading, right? Fear of, losing out, FOMO, right? Fear of losing out, or fear that, you'll lose even more. So all of a sudden you change your plan because you're afraid of losing it, rather than rely on statistics that has been based over hundreds of trades over years, that you know that this is a certain stats you're going to get, rather than your own emotions, which you have no idea, has it been proven to get a better result than the statistics have shown. Now, of course, if your own emotions have guided you to become successful all this time in trading, then yes, you can rely on that. For example, this is what I call discretionary traders. In my time of trading, especially in the prop firm, I've only seen one discretionary trader that has done well, and they can do pretty well, right? For some reason, they have intuition in the market because they've been trading for so long, but it's very rare to come by. For the most part, emotions destroy the objectivity in our trading, right? So if you're using fear and greed to base your decision on, this is where you get inconsistent result, and you have really no idea what to expect, right? That is why, guys, I show you the probability table, right? The numbers, the statistics. So you really know in advance, right, what can possibly happen, and then you base that and place your trades. Now, next, he or she understands that no one can predict where the market is going to go and doesn't try to. So if you can predict the market, then it's best to just go outright trading, no need to trade options, because you'll be trillionaire by now, right? But the chances are, somebody actually predicting the market where it's going to go, especially in the short term, is going to be very difficult, right? So that is why with options trading, at least the way we trade, there is no need to predict, right? Because we already know the statistics. So if you just see the statistics, the numbers have already shown itself that if you just put it on, rinse and repeat, you're going to get a positive result. Why do you want to worry about where it's going today? Is it going a little bit up? Is it going to be down? Should I change it a little bit? I feel that's a little bit too micromanaging, and it should be more towards maybe day trading if you're doing something like that, right? If you're doing scalping, day trading, swing trading, whatever it is, you can leave it to that. But for options, there is no real reason you need to. I feel that it defeats the purpose of trading options if you have to just stare at the screen all day long. I'm pretty sure you guys came into this program because you want to have time off the screen, go about to do your stuff in the day without having to worry what the market is doing every single moment of time, right? So guys, please, I don't want you to get too engrossed into what the market is doing. Is it going up? Has it hit this resistance point and all that? I would say a little bit too much, all right? Now, next, does the planning before he or she enters the trade and already knows well in advance what he or she will do when the market gets there. So wherever the market goes, he or she simply executes the plan. So the time to plan, like I say again, is always before you enter the market. The moment you enter the market, you have a position, guys, it's all automatic in a sense whereby you just execute according to your plan. You already plan well beforehand, right? You shouldn't be changing things here and there, right? The thing to change all that should be planned well beforehand rather than later on. So the way that I see it is position yourself like a clock, right? So I'm going to share with you a story that I kind of read many, many years ago, and that stuck to my head. So there was this trader that has his own system, and his systems, based on his own testing, was very good. He had good results. But when he traded it, he always cannot get the good result. He could not replicate. He was always losing. And he found out was because he always second guesses his strategy and he always intervenes with it because of his emotions. So here's what he did. So instead of he trading it, what he did is he hired somebody to just trade it. So this person was just a paid clerk. So all he does is just enter, exit based on the plan. That's it. And he was being compensated based on how well he executed the plan. So this clerk executed the strategy because he had no game, he had no skin in the game because he's not losing his own money, he's not investing his own money. So all he's doing is just executing it. So he's an executioner, like just like a clerk. And at the end of it, he found out the results was as good as the test. So maybe a little bit extreme, guys, but if you cannot control your own trading, consider hiring someone to go and execute a trade for you. But for the most part, guys, just trade very mechanically, right? Because that's all we really need to do. So this quote down here has been my guiding principle for many, 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 many years, right? William Eckhart. He's featured in one of the books called The Market Wizards by Jack Schwager. I'm not sure how many of you guys have read it, but it's a very good book, right? It dives into the mindset of these traders. And one of the traders is William Eckhart. And he mentioned this quote inside, right? Don't think about what the market's going to do. You have absolutely no control over that. And this is the best part. I love it so much. Think about what you're going to do if it gets there. So this all comes down to module 4.4, right? Plan in advance. Don't try and wait until the market is moving and try to guess, oh, is it going up? Is it going down? No point. You really know beforehand, right? Like I mentioned to you guys, many of you guys, right, who are new to this program, I mentioned to you guys that we cannot predict what the market is going to do, but we can control what we do. And we already know beforehand that the market can only go a few places. Can go all the way up, go sideways, go down. We already can plan for it. So just plan for it, execute it. All right. You'll find that your trading is much more stressless and that you're able to rest at night, especially if you already understand what's the worst case scenario can happen and you accept it. Now, next, positive attitude. So this is something that's a little bit overlooked, right? But positive attitude is actually very important, right? When I was in the prop firm, we have traders that always complain about whenever they're having a bad day and losses. Over the long term, these are the traders you don't see around anymore, right? Because having a positive attitude to trading is very important. Now, we of course get affected from time to time, but we want to minimize it, right? So never let a losing or winning trade affect him or her. So back then when I was in a prop firm, I remember those days when we had a winning trade, we would all celebrate. After the trading day, we would go and have drinks, celebrate. But then when we have streaks of winning days, like 4 days, but when we fifth day, when we have a loss and that loss wipe out all the winners which you have and even more, all of a sudden, you feel so down and depressed. And I remember thinking to myself, I was like, what did I celebrate all those days for? It was like all my emotions of getting so excited and happy, thinking that, wow, I'm going to have a great month, all was wasted because of one bad day. And I told myself from then on, whether is it a winner or a loser, I'm not going to be bothered, right? It's just a number in my stats that I'm going to just track over the next 100 or more trades, right? I'm not going to be excited when I get a winner. I'm not going to be depressed when I get a loser. So when I started to have this mindset, it kind of really helped me to trade it so objective. right? Towards the end of the day, people ask me, have you win or lost? I'm just down. Yep, that's it. Next day, oh, I'm up. No emotions, don't get affected whatsoever. Because if you trade this long enough, you realize that, sooner or later, you also forget what happened the past 100 plus trade back then. You won't remember what was the trade anymore. So also the winning trader, or rather the winning mindset of a successful options trader, is never concerned about any singular trade, be it a winner or loser. So each trade is just one of the hundreds of trades that you will eventually place. So all trades are pretty much equal. So like I mentioned, again, adopt the mindset like a clock. You're just taking down statistics, right? Okay, first trade is a loss. Okay, second trade is a loss. Then you think to yourself, I wonder how will this pan out in the next 10, 20 trades, right? Just document it. That's pretty much it. Next, as you can see, same thing, expect the losses will come, drawdowns will come, losing streaks will occur, but know that as long as he or she sticks to the plan and mechanics, the edge will play out over the long term, right? Again, all this has been shared with you guys. If you understand this, again, easier for you to take all the losing trades and not really be affected. And focus on the next 100 trades and more, not just the 5 to 10 trades, right? Again, law of large numbers. This is where I tell you guys law of large numbers comes in. So an analogy would be the casino business, right? If you guys are not familiar with the casino business, it's designed to be in their favor in the long term, but not over a short number of trades, right? For example, a person that comes into casino may just win 5 times in a row, but the casino is not really too affected by that, right? Because they know that in the long term, the odds are in their favor, the house edge. They have the house edge. Now, provided, of course, you don't try and have certain ways to game the system. I'm talking about playing the house edge, right? Just roulette like that by itself. So in the long term, the casino will know that they will be up, right? That's why you see the casino, you notice it's 24 hours. That's one thing. Why is it 24 hours? Law of large numbers. Number two, there's no clock. If you notice that, right? At least the casinos that I've been to, there's no clock. Why is that so? The casino doesn't want you to know that it's time for dinner, it's late or whatever, right? They want you to stay in the casino. So why do you think they have food inside the casino? They want you to stay there and bet. Why do they offer you free rooms? They want you to stay there and then come back to play with them so that the law of large number will play out. So same thing with our business when we're trading options, let the law of numbers play out. Okay, next, so step-by-step mindset walkthrough. So I'm just going to walk you through some questions to ask yourself before you place a trade, especially for those who are new to this program. This, I feel, can really help you. So starting off, before you actually start trading, this is where you get into the construction of the portfolio first. So ask yourself these questions. Do I have strategies in my portfolio that will capture moves in the market if it goes up, sideways, and down? Okay. Second question, do I understand how my portfolio will perform based on my strategy selection and my capital allocation to each strategy, depending on where my market moves, where the market moves. So this is a very important one to understand. Now, next, now you've already got your portfolio constructed, you know what to expect. This is where you start to plan what you do before you place the trade. So you got to ask yourself, what is the max risk for the trade? All right, now you know what's the max risk for the trade. Have I accepted the possibility that it can potentially be a max loss for the trade? Right? The answer hopefully is yes. If it's no, you have to reduce your size. Next, have I already planned my exit scenarios thoroughly and know exactly what I'm going to do regardless where the market goes? If you get into the position ready, and then you still have to second guess yourself. Ask yourself, oh no, the market is moving. What should I do, guys? Well, am I better off if I, clear off now or something like that? That means it tells me you haven't planned your exit scenarios, or you have planned it, but you haven't accepted it. Remember, plan your trade and then trade your plan. And finally, for this, am I going to be surprised if I happen to hit a big loss or max loss on any given trade? The answer should be no, guys, because we already know full well beforehand what's the worst case scenario. So finally, after placing your trade, so if you have done all the work beforehand, after you place your trade, guys, this is where the simplest thing to do you come in, right? So firstly, is it at a point where I'm supposed to adjust or exit my trade? For example, 50% take profit or 40 to 50% take profit, depending on which strategy, or hold to expiration, or 21 DT, is it there? Or has it hit the max loss, right? Initial buying power requirement for the undefined risk trades, right? If yes, execute it. Simple as that. If no, guys, close the trading platform, go and do your thing, right? Don't have to look at the chart, every single thing, as though, it's going to change based on what you do. So I saw a very funny video the other day. I should have just taken it and show you guys. It shows a candlestick, right? price movement. There's fast forward, right? Imagine like candlesticks like this. Then towards the end, there was this candlestick that was going up and down, right? Up and down, because it was like intraday. So there was this guy that was going to the side of the screen, right? Imagine this is the monitor. He's going to the side of the screen down here, and he's blowing it. He's And then the candle will just keep going up and down, hoping that the market will go up. So guys, don't do this, right? There's no way that we can control the market. So definitely just don't bother about it if it's not at the point that we need to manage it. Okay. Next, if you already prepared your trading plan thoroughly as you should after placing your trade, your sole job is to simply execute your plan. So finally, next thing I want to share with you guys is essential reading. So I read this many years ago. This has really helped me a lot because it really talks about understanding trading, what we cannot control and what we can control, right? And really to talk about probability. So how many of you guys, by the way, curious, have you read this book before? Trading in the Zone by Mark Douglas. Very great book. All right, chat say yes. Arvin, not yet. Okay. So definitely read this, because if you read this, I can say that you will understand how to trade more objectively. You will be much positioned better to have success for the long term, right? So this book. So I took an excerpt on the very first few pages, right? As you can see, the very first few pages, he talked about this attitude survey already. And it's very good because it makes you be honest with yourself as a trader to understand yourself. So I'll just go through with you guys this question. Let me know whether you agree or disagree, right? So number one, to make money as a trader, you have to know what the market is going to do next. Guys, agree or disagree? You have to know what the market is going to do next. Disagree? Brian says disagree. Mao says disagree. Yes, that's right. So you guys got it. There's no way we can know what the market is going to do, right? It will do what it does. Now, question number two. Sometimes I find myself thinking that there must be a way to trade without having to take a loss. So be honest with yourself, guys. Agree or disagree? Do you find yourself that there's some way, somehow you can manage it so that it doesn't become a loss? Yeah. So back in the early days, I said agree. We're only humans, right? Because we all want to find the holy grail, right? I'll be the first to tell you, when I first started it back in 2005, I would even buy these trading systems that would just point arrow buy sell, right? Because they tell me that it's going to all be winners, right? So very important to understand that losses will come. The sooner you accept it and know that it can have a long losing streak, you accept it, you'll trade more objectively. Now, next, making money as a trader is primarily a function of analysis. Agree or disagree? Disagree. 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 Yep. So very clear cut, right? It's not just a function of analysis, right? It's a lot of other stuff as well. Now, next, losses are an unavoidable component of trading. Agree or disagree? All right, you should agree. If you disagree, we have to review your application to this program again, guys. So losses is definitely something you will have to expect. Finally, number five, my risk is always defined before I enter a trade, because I know full well what's my max loss. Agree or disagree? Definitely agree, guys, right? You'll be surprised. A lot of people actually don't know about this. Many people I spoke with, especially during the prop firm, you'll be surprised, right? The prop firm will have people come in, they don't define their risk because their money is not theirs. They're trading the company's firm. So they will just choose the amount which they want to make the money, and then they don't even bother about the risk side. And when they get into a loss, that's where they get into trouble. But now it's different, guys. We are trading our own money, our own hard-earned money. You must always know what your risk is before you join. So guys, this is it for the mindset training. I hope it really has benefited you guys. I've tried to put as many things as I can that's really helped me along the way, that developed me as a trader, to really help put things into perspective for you as you go through this program.
By the way, if you like this video, then you're absolutely going to love this next video which I have for you. So go ahead and watch that video right now. Also, if you haven't already gotten your free copy of the Options Income Blueprint, you can do so just by clicking this link down here on your screen, and you'll be able to get it for free. Alright, I will see you in the next video.